Yeah.
All right, guys. Just had to have a little fun, man. We had to have a little fun. That's what we had to do. Just had to have a little fun. This was an interesting day. This was an interesting day. The day started like pre-market. We look bad. The numbers that came out actually for GDP today, the number actually looked pretty good, which is not supposed to be good for the stock market. But you know what? We rallied. So that being said, tomorrow marks the official day of the Santa Rally. Right, the Santa Rally is on our calendar. It's the last 5 days of December, trading days of December, and the first 2 days of January. So tomorrow officially we start what is considered as the Santa Rally. Right. Right now we're gonna go to the chart. We're going to see where we are. We are at a great level. Can we make it? Can we get that rally? I hope we can. I do not know yet. We're gonna dive into it, guys, and we will see. We'll figure that out together and see how we going. Okay, hold on. Let me just quickly just set this thing up right here. There you go, and we are good. First thing we're going to do, let's take a quick look at the economic calendar. As you can see, so today we had that bit of data dump today, right? That's the number that came out. That was pretty good, much better than expected. That's the GDP numbers. Can we trust them? I don't really trust them, but hey, it is what it is. That's the number we have, so that's what we have to go off of. All these numbers were not bad. This is why you might see a lot of the small cap stock actually pull back, and you see Bitcoin was actually down and tech rally. Why? Meaning with GDP numbers looking good, the likelihood of us getting additional interest rate cut is actually pretty low. So that is how we may not get any. So that's not good for small cap, but that's good for large cap, right? The large cap does not care. They don't really live on borrowed money like that. Those companies are making a ton of profit, and when you don't have enough money, if you have people have additional money, they can invest in Bitcoin. So therefore, since we may not have any additional rate cuts, Bitcoin actually went down. If we have time, we'll take a quick look at Bitcoin as well to see where it is. So this is what I wanted to let you guys see. So tomorrow we are getting initial jobless claim. We typically get this number on Thursday morning, but tomorrow we are getting that number because obviously Thursday is a Christmas holiday, so the market is closed. Therefore, we're getting that number a little early, right? Depending on how that number is, we might gap up tomorrow, and if we got pop, I think we're gonna have a very, very strong day tomorrow. Because one of the best thing about it's great and bad, right? Depending on how you trade. But the best thing about during those times, the big money is out of office right now. All those guys they at Aspen and they wherever they are with their family, right? They at the lake house for Christmas, whatever it is. So the big money is not around. We still have algos trading, but the big money's not around. Those guys are out, and retail traders do have a bias of buying as opposed to selling or shorting. So therefore, that typically helps push the stock market up a little more. So that's where we're going to start right now. We already went over that. We'll also take a quick look at the free and greed meter, see where we are. Right now, people are getting a bit complacent. We're getting into greed. So this is again. I keep saying it. I know we're rallying up. I know I see what's going on. But at the same time, I still want you guys to be extremely, extremely careful when you're trading once we start getting to the greed level. Once you start getting to greed level, that means there's complacency going on, right? We can see crypto is still in extreme fear. Obviously, we have not had a one in crypto since we had that drop from I think from one like 110, 107 down to the 80, low 90, mid 80-ish level, we've not really done anything. We're just like consolidating at that level pretty much. All right, so we're going to dive right in into the SPY and see what's going on and how we are currently moving. Let's see. Okay, again, I just want to remind everyone again, I still have the same level. I'm not super happy about where we are right now because I'm running out of time. I think I will keep reminding you guys that because I did have a 700 level for end of year. That was my target for end of year, 700. So we'll see if we can make that push. We have a lot of work. Actually, we don't have that much work to do. I mean, the market has made 15, $19 move before. I mean, we have about 5 days, 3 to 5 days to make a 13-point move to get to that level. We'll see. But I'm still keeping that bias as we take a look at that again. So yesterday we talked about that. We did have that pin bar yesterday, so you guys can see that. We had that pin bar yesterday. I see you here, Jeff, man. I appreciate you tuning in. We had that pin bar, and again, right at the open, when we dig in the chart a little bit, I will show you guys what happened. I could not believe it. I thought we were going to have a down day today, based on what we were looking at right before the open. But what we did really was just push up, and now we sort of closed it. We actually closed above that trend line. The trend line we went over, it's a weekly trend line. That's the one we went over. That's come from all the way down to the COVID lows. I mean, the COVID highs, right? Just want to show you guys that again. We actually broke above that. We have broken above that a couple of times, but every single time we do, like right there we do, and eventually we typically get pulled right back down because those channels, the bottom of the trend and the top of the trend, typically are used almost as like magnets. So that's the way it is. By the way, if you here guys, if you are here, make sure you smash the like button. Drop me a comment if you have any questions. Feel free to type them in the chat. And once again, make sure to subscribe. Check the little notification bell. About 60% of you that watch those videos, I've noticed, are not actually subscribed to the channel. So I would really appreciate your support so I can keep pumping out those type of videos for you guys every single day. This is what we do. As we go into that, the quick reminder that over here we leave out the emotions out of it. We all have our biases, but I'm not going to give you my bias. This is strictly technical. We're going to go into technicals and show you exactly what the chart is telling us, not what I think the market should do or what the market is about to do. I'm not a genie, so I don't know. I'm not clairvoyant or anything like that. But what I can do is, based on technical analysis, is try to pinpoint exactly, interpret what the chart is telling me. Remember, again, the candlestick pattern is the language of the market, and the market will always tell you what exactly it is doing, right? Always telling you that. It gives you hints, but again, when I say tell you exactly, let me not say that. Let me rephrase that. It's more giving you probabilities. What we do here is a game of probabilities. So based on what we're seeing on the chart, we trying to get the edge on the probabilities. What is more probable? Which side is more probable to happen? So that's what we're trying to interpret. Remember when I was calling you guys, since we were moving up right here, right? If anyone remember that, just a quick recap. As we were moving up right here, what did I call? I said it seems like we're going to do what? We're going to consolidate for a little while because it seems like we are making an inverted head and shoulder pattern, and it seems like what we are going to do. So we already had this, right? I already had that. I'm like, okay, so it seems like I think what we're going to do is we're going to consolidate, which means we go up, we're going to pull back to build that left shoulder. So right now that left shoulder is done, right? This is done. This is go time. If we can't make that push, then I think this is going to fail. We right tomorrow's decision day. That's what you can see the thumbnail says. Tomorrow, from where we are right now, tomorrow is decision day. So tomorrow, if we do have favorable jobless claim numbers, right? If we have favorable jobless claim numbers, we will gap above that level, and that can anticipate us making a push toward that 700 target. All right, guys. When we go in the 4 hours, again, we go into 4 hours. So this is again, you're going to see that pattern repeat all around the chart, all over the place, right? So right in the 4 hours, I called that out when it was happening. We did build a bit of inverted head and shoulder pattern, and then we make that push, right? So that was on the 4 hour time frame, and we can all see that. And if you look at the MACD right now, we're pointing up on the MACD. The MACD actually is now positive. That is great, great news, guys. That's absolutely great news. The MACD has turned positive in the 4 hours. If we go on the 2 hours, 2 hour time frame, okay, we can see that this move is pretty much done. So that was a double bottom. It's always great when you have multiple patterns, even different patterns, double bottom with a higher low, right there. So you guys can see where I had this trend line done. So as we trading over the next couple of days, just be mindful of a pullback right to one of those levels. All right. The way the market has been doing that lately, it seems like on when it's making those pullbacks typically happen in one day, and they typically happen violently. I mean, you can see this candle right here, right? You can see that they typically happen violently. So trade carefully. Be mindful of what you're doing. Do not forget your trading plan. Stick by your trading plan. Make sure you have stop losses in place, because when the market goes down, it goes down rather quickly. But as of right now, I don't see any cause for concern yet. Same thing I told you guys last night, right? If I see cause for concern, I will let you guys know. But as of right now, it's ho ho ho. We're moving on up. That's what all I'm seeing right now. 30 minutes. We're looking at the 30. Boom, boom, boom. Okay. Again, all we having in the 30 minutes is a consolidation. Guess where that consolidation is being done, guys? This is why I love, this is why I'm so passionate about this. This is why I love technical analysis. We came right to that trend line. This is the 30 minutes, and once we got there, and what have we been doing the entire time? We're just consolidating, right? Just consolidating. So to as for tomorrow, this could be considered like right this level. This can be considered as your bull flag, right? Man, that is a long pole. Meaning, if we do break out to the upside, so there's two ways. Again, I'm gonna review that again. There's two ways to trade this. When you're trading that, there's two ways of trading it. You can either try to take it if it does a pullback right on top of the support level. You can take it there. If you are aggressive, you have a tight stop loss, but your risk reward ratio is much larger. Or you can do it. Actually, there's three ways. I'm sorry, there's three ways. Or what you can do, you can wait for a break of that trend line, right? You can wait for a break of that trend line, and then you can get in, right? The trend I'm talking about is this right there, part of the flag. Or if you want to play it very, very safe, you can simply wait for a break above this level, wait for a break, maybe a retest, and on the way up, you can take it right there. You can do that if you want. This is like being very, very conservative. Yes, you'll get a much lower risk reward ratio, and your stop loss will be a lot wider than I suppose if you take it right here or right there, right? But these are all different ways you can play it. Just because people say they trade a specific strategy or a specific pattern does not mean every single person execute that the exact same way. Make sure to execute that in a way that aligns with the size of your account. The size of your account, make sure that's something that you execute that in a way that also aligns with your personality, because some of us get jitters. If we start seeing a bit of a pullback, we in the red, we're gonna close the trade. We just can't manage that, right? So that's the part of trading. That's the psychology of trading. So make sure you have that down pat. Okay. If we go down, I said I was gonna show you guys exactly what happened this morning, right? I'm gonna go into 1 minute just so everyone can see that even a little better to see how, this was how crazy this happened. So I'm looking at that right at the open, coming to the open. I'm looking at that and I say, okay, you know what? It seems like this is the support level right here. We have that support level. I'm like, oh shoot, seems like we've lost the trend line. We've lost our trend line. I'm not sure exactly what's going on. The numbers already came out. But then what I'm looking at, okay, well, we did that. So this is a lower low. Then we pull back up. I'm like, okay, this is a lower high. But when we came down, it was like, okay, I'm like, okay, so are we going to keep going down? And we didn't. So instead we made a double bottom. Then when we push up and we started consolidating, I said, okay, I just want to see what happened. Was that a consolidation for us to dump? The, guys, this is a 1 minute candle. 1 minute, not 5 minutes. This is the first minute of the open. We jump from what 683.92 all the way up to 685.27 in 1 minute. I don't know who was buying, but hey, we appreciate you. Whoever it was, we appreciate you. And from there, we were pretty much off to the races. That's where we started really taking off. Right. That's pretty much what happened. So that anyway, that's the spy, guys. That's what the spy did today. And as of right now, we are set up very nicely. We right at the neckline right now. We at the neckline. We in the thick of it. I can remove that so everyone can see that a bit more clearly. We currently right now at the thick of that. This is the neckline, and we need a gap up. A gap up above that level would be great. If we can get a gap up and a pullback, I think we can struggle on and push up to that level before we eventually go back down, right? So that's what we're looking at for tomorrow. So we unfortunately we have to rely on what the numbers are going to look like. That's just how it is, right? We're just gonna have to rely on the numbers. Depending on what the numbers look like, that's how things going to work out. So we have to actually pay attention to that. And when those numbers come, if they good, we should be fine. If those numbers come and they good, well, let me not say good. Let's even say favorable. We should be in good shape if they are favorable to the market. Take a quick look at the Qs. The Qs didn't do very well today, really, comparing to what the SPY is doing, which is still, in my opinion, a little bit problematic. Because while the SPY seems like it's about to go make an all-time high, the Qs are not giving us anything yet. I mean, we are. Let me see how, if we count that exactly, we're about nearly 2.5% away from the all-time high on the Qs. I mean, we have not even reclaimed the neckline for the double bottom play. We have not even done that. That's where this would be right there. That would be our neckline for a double bottom. We've not even taken that. And that trend line, that downward trend line, we've not taken it. Now, we have some good setups, right? We do have some good setups. You can see we having a bullish divergence in the MACD. That is good. So we're hoping we can get a bigger push. Hopefully tomorrow we can get a bigger push. So we're gonna take a look at that. And today seems like what carries the Qs today really was the big companies like the mega cap. The Mag 7 sort of like pushed us up. Taking a quick look at our the trade that I've talked about. As of right now, for me, it's end of year. Don't know how long I'm going to stay in that trade for. I mean, I do think it's a good level of entry that I got on this one. Being up right now, let me see. Uh, got in around 332. This is already done a 17-point move. And for anybody who trade contracts, you know a 17.2 move or a 17-point move anyway. That's a strong move. So we'll take that, but we still have room to move up to about 257. Let's see what we do. And the other one we talked about was Nvidia. Again, this is why I love technical analysis, guys. There's no fluff, there's no whatever. You guys can see that, right? So I've been coming here and telling you guys, hey, I got in, this is where I got in, this is what I was seeing, right? And you guys can clearly see I said why I was taking it. I show you the level I took it, and you can see where it is now, right? This is what I do, man. Hey, like I said, if you know anybody that can take anything away from these type of videos, as even if it's just the teaching or double checking a few things, just forward them the channel, man. Just forward them the channel. I would really appreciate it. On the other hand, this is the part I wanna. This is where I want you guys to be really, really careful. So I took a look at the VIX today. The VIX being low says what? The VIX being low expose complacency. And right now, there's a lot of what we're starting to see is complacency. The VIX is too low for my liking. It's the same reason that you can be in a play like option play, and your play is going up, right? Your play can be going up, and what you are looking at while your play is while your play is going up. I mean, the stock is going up, but your option is not really increasing in value as much. The reason why is because the volatility index is so doggone low. This thing is so low, and the IV, a high IV, is very good if you play options, right? That's something that is very very good. But when it's low like that, being low means that obviously stocks are going up, but being this low means there's complacency, and this is how we get black swan events. All right, I want to talk to you guys directly to do that because I want to really emphasize on that. It doesn't matter how great the market looks. I'm scared whenever the market looks like everything says we're going up, right? And if we do, we'll say, oh, you should have known. Yes, but this is how you get blindsided. Those black swan events always happen when you least expect it. People get comfortable, the market's at an all-time high, things looking great, and we're going to take off, and then boom, we crash. There's never been any crash when everyone expect a crash. All right, because you're never gonna have a crash. Why? Because everybody hedge. Again, let me repeat that. Let me go into that just a little more. The reason you have crashes is because you have a lot of people that have stop losses. As the stock is going down, it start taking out stop losses, right? So when it start taking stop losses, you have there's a lot of selling. The sheer volume of the selling is so violent and so quick. It freaks out a lot of people. So everyone just start to sell and going on the short side. But when everybody's scared, guess what? Everybody already have some puts. Everybody already have some short options, or whatever it may be. People hedge. Those hedge funds are not try. They're not trying to give you some money when they trying to shake people out to sell. They're not trying to make sure everybody's okay. No, this is blood sport for these guys. You know that. This is bloodsport. What they trying to do is get you so scared and so fearful. I've been there, and when I was a new trader, I have been there, where it's like you had certain things, and then some crazy things happen in the market, and you like, I don't want to lose, I don't want to lose my profit, or this thing is down on me, I don't want to lose, and then you get out, and but when you get out, a bunch of people got out, and the market pulled right back down to 20% before you know it. And next thing you know, guess what happens? Um, it gets to a level, and those guys buy, and then 3 months, 2, 3 months later, you're looking at this thing like, man, only if I held, I would have been up 40% on that play. I could have made 10, 15, 20 grand on that play. That's just the way it is. But anyway, that's just my warning. What I'm letting you guys know what I'm seeing right now, right? Gun to my head, I would say, hey, we're going up, right? This is what I'm seeing. But at the same time, I still want you guys to be careful because right now the VIX is almost at almost Jesus Christ, very very close to all time low, very close. The fix is very close to that. All right. So as you guys are trading, I want you guys to be mindful and be patient and take care and don't do anything foolish. Again, make sure you just keep reminding yourself that on the weekly level, although we look very nice, we look very good, you have to keep in mind. You have to keep in mind, I'm switching to the chart right now. You guys have to keep in mind, we still have the possibility of doing one of those crazy drop for whatever reason. Maybe it's war with Venezuela. Maybe it's a cyber attack. Maybe it's the economy just giving way. Or those banks just announced that hey, we actually in a recession, right? So this is how the game is played. Um, at the same time, this is what I'll tell you. Last time we got above this line, that was April of 2021. Because the market can be irrational for a long time. That was 2021. It took us all the way to 2022, 1 year before we eventually had the bear market of the 2022s, right? But at the same time, if you're really looking at it, this is the COVID lows, right? This is the COVID lows. This is how funny these people play the game. This is the COVID lows. We start here. This is the bear market of 2022, and this was that pullback. We had a pullback right there. We pulled up when we were liberated from our money and from some of our positions. Or this is the liberation day tariff saga. Guess what we did? We pulled right down where? Right to that trend line. We didn't go any lower. So anybody that was watching who knew the levels, who knew the technicals, once it got to that level, they were buying. They didn't get lucky. Well, some people might have, but a lot of those guys did not get lucky. They knew exactly where they were taking. The people that be know exactly what they taking the stock and what they're going to buy it. They know. We have a lot of computer program that's programmed for that specifically. They know exactly where they're going to buy things. Okay, let me just take a question here before we go. I see there's one in the chat. What should be the risk per trade and how to size positions as new retail traders? Okay, you want me to peep you some game. So here's the thing. You're playing your risk. This is something that is personal to you, right? How old are you goes into it, and how much money do you have? If you're playing with money that you desperately need, obviously you're going to be very very conservative, right? Depending on the size of your account, I understand what people typically like to say is the rule of thumb is do never risk more than 3% of your account on one trade. That's that's the rule of thumb. Never risk more than 3% of your account on one trade. But that sounds great. But what if you're somebody that's starting out with $500 or $1,000? Like that's position size. 3%. I'm going to put 3% on a play. That's $300. And then of that 3%, you can only lose 10%. So $30. You can do that if you just want to do that. Okay, you're learning a strategy, you whatever. I get it, but that's going to be extremely extremely hard to grow that account. That will be extremely extremely hard. So for new traders, personally, okay, you know what? I cannot give financial advice, but this is what I would say. If I was a new trader, what I would learn to do first, I would learn technical analysis, and the second thing I would do is learn how to trade options. That's the route I would take. and I'll make sure I put enough money aside and said, okay, you know what? I'm going to start an account with $500, no more. $500, and I'm going to go in and I'm gonna put the entire 500 into one play with a stop of me losing maybe 10% or 20%. Actually, I even go 20% since it's option. That's the way I would play it, right? I would just play it like that and do that risk. Because if you go and do try to do the 3% thing, and because now at that point, if you really once you and for you guys that doesn't know about option yet, if you're going to learn option, what you're going to learn is when you're going to buy those cheap options, you hear people talk about, oh, I made X amount, I made 50. A lot of times people are gambling, right? They would buy something. I'm gonna say a word that may not mean much to you right now if you don't know options, but people might buy delta that's like, let's say, a 20 delta because it's cheap. 20 delta means you have an 80% chance of losing the trade. But a lot of new retail traders don't know that. So anyway, just going back because I'm going to have to jump to my other meeting. What I would advise a new trader to do is learn technical analysis. As you can see, as I'm predicting these things, as far as what might happen, this is all probability. All probability. That's all we're doing. We're going to lose some trade. It's inevitable. You're not going to win all of them because there's no exact science, right? It's what we're doing is we're just playing probabilities. So learn technical analysis and get good at trading options. As far as position size, it's all about based on your account size and your appetite for risk. But what I would do if I was starting over, I would put $500 in an account and I'll say, hey, I saved that. This is what I'm going to do with it, and whatever trade I'm going to take, I'll put the entire 500 in that. I would just do that and just keep doing that over and over until I build that account to where I can like, okay, now I can trade a little different. Again, as you grow, you modify your trading plan. But more importantly, do not forget to have a trading plan all all the time. Whether it's for day trading, swing trading, investing, have a trading plan. All right, guys, it's been fun. Tomorrow is Christmas Eve, so you guys go ahead and have some fun with the family. For those of you that's in the community, I'm going to switch over to Teams so we can have that meeting and review a couple of stocks. There's a couple of entries that I saw that I actually really like. I want to talk to you guys about. I also want to review a couple of the plays we currently have open as well. Take care. Have a good night. Again, share this video with some people, guys. Help me grow this channel. I appreciate you guys tuning in. It's been real. It's been fun. Tomorrow, if you can't make it tomorrow, that's okay. I get it, you guys, because it is Christmas Eve. Other than that, guys. Uh, quick reminder: the stock market closed early tomorrow morning. Not tomorrow morning, midday. We have a half day, so we have a half day tomorrow. So if you plan on trading tomorrow, just remember you only have the morning to trade. All right, guys. Stay warm if you're in the East Coast or in Canada, wherever you are. Stay warm, stay happy, have some fun, and stay green. I will see you guys tomorrow. Ho ho ho. Ho ho. See, this is why they have a Korean singing, man. This is why. I'm telling you.